Thanks. I hope it works.
I can listen to you right here. Go ahead.
Are we live right now? It says I'm... Or did we do a new one? Was it a brand new one?
Yeah, it's a new one.
Fuck!
Why? You're okay. Don't jump over. They might be able to hear you. It says you're live, Paul. Go.
Yeah, but I have nobody watching me.
Okay, just give it a second.
Oh, now we have 8 people watching me.
See, there you go.
Go to the other one.
Tilt the screen down a bit.
I can't. That's the main screen, so I can't even share.
I love you. Go get.
Well, how do I share a screen though? How do I share a screen? Okay, guys, we're live right now. Seth, is there any way you can get on there or no?
No, I can just talk.
Okay. How do I share a screen? How do I share a screen? How do I share a screen? All right, guys, so here's the deal. When I came up with the idea for the cruises, my whole theory behind it was, let me find the cruise industry in general was completely kaput. It was shit. It was terrible. I sat there and said, all these stocks are down a ton. Let me go pick the best one and let me go bet on it. It was by far and away CCL. Here's how I looked at it. You can't use the 8 pillars because the numbers were so messed up from cash flow. It would just throw everything off. So what I want to do is say, one, are cruises going away forever? The answer was no, definitely not going away forever. Fine by me. Second thing was, if it doesn't go away forever, who will win? And to me, I thought to myself, we don't know how long this pandemic shutdown is going to go. So I wanted to bet on the one that was the best financial situation. So what I did was I want to see which one had the least amount of total debt relative to their revenue. Okay. So I'm going to speak out loud. Somebody said you can hit a share screen button. Where's the share screen button? Share screen button, live chat, share screen button. What's this? Share a link. Okay. So let me just talk 500-foot view here. That way everybody can just understand and get the idea here. So we look at a company like Royal Caribbean. We want to look at Royal Caribbean, Norwegian, and Carnival Cruise. Royal Caribbean, they did in the last year, call it. Do we want to look at the last year? We don't want to look at last year. We want to look at annual. In 2019, they did $11 billion in revenue. Okay. So stabilized, they did $11 billion in revenue. Their current debt, total debt currently is $23.5 billion. That's 2.2 times revenue. Okay. Let's go to NCLH or NCHL Norwegian. Norwegian's NCLH. In their previous year, in the last full year, they did $6.4 billion in revenue. And they currently have how much debt? 13. So 2 times. Now, CCL. CCL, in their big year, did $21 billion in revenue. Now, they might be different now. It's actually more now. However, why did this work out? I'm flustered right now. So right now they're at $50 billion, which is 2.5 times. So I thought to myself, okay, that's a lot, right? But I also look at their cash position. What is their cash position relative to everybody else? They have almost a full year of revenue just sitting in cash in their bank accounts. They raised a lot of money. They sold a lot of ships, right? But the big kicker here was then I thought to myself, okay, who has the best profit margin? I looked at their comparable last 40 quarters. That's 16 years of data because Norwegian has only been public since like 08 or 04 or something like that. And Carnival Cruise Line's profit margin was 20% and 25% above the other 2 companies. So my thought was, okay, they're also able to make money at the higher rate, which is, by the way, a huge number, 20 or 25% above the other 2. That was a huge number. So then I also thought to myself, when it comes to lending, who's going to want to back which company? banks are going to want to back the biggest one. And who is the biggest one? Carnival Cruise Line. So even with all these things that were happening, I thought to myself, if I think cruises are sticking around, which one am I going to bet on? The one can afford the most debt. And even though in total dollars they had the most debt, the ratios were about the same. It was 2.2 to 2.3 to 2.4 or something like that. It was about the same ratios. So why would I bet on the one that makes the least amount of money, doesn't have the biggest market share, and has the least amount of ships? That didn't make any sense to me. So Carnival Cruise Line to me made the most sense. Then I went and looked at them and said, okay, now let me take them and say, let me set them off and say, if they get back to normal, what would they be worth? Now, since then, they have done some things that have decreased my value of the ship. So first I thought they're going to be worth 50 or $60 billion. But now since then, they've also issued more debt. They have issued more debt, but they've also issued more shares that diluted it. But that's why value investing works. You want to buy at such a low number that they can do all these things you can be wrong on and still end up okay. And that's what happened here with Carnival Cruise Line. So I just completely eliminated everybody else because I thought to myself, it's one thing if I was looking at like Southwest Airlines. When I looked at Southwest Airlines, Southwest is not the biggest airline. They didn't have the most revenue, but they were by far and away the most profitable and had the best debt on there and the most efficient. So I thought to myself, I'll make that bet. Here, they had the best debt overall. They had the best debt before the cruise lines had issues. They had the best debt ratios. After, they've taken on way more debt, but they have a lot of cash. So I'm okay with that. Yeah, I social dancers, I'm sorry. I don't know how to share the freaking screen. I apologize. Obviously, I'm a little flustered here on that one, but I'll survive. Let's go to
Paul, why do you think the margins are higher for Carnival?
I just think they have they're so large. They probably have some efficiencies in place that a lot of them make 11, 12% bottom line versus the other ones are at 8 to 9%. It's actually 33% higher in some situations and 40% higher almost in terms of margin. So I look at that saying there's probably some efficiency of scale there. So I look at this thing, and this is part of the qualitative analysis of investing they have to do. I just sat there and said, why even waste my time? Now, are there cruise line ETFs? I don't know if there are. But if you believe in cruise lines, maybe the right thing to do is to buy the cruise line ETF if there is one. But I just chose to put my eggs into one basket and bet on one cruise line specifically, and that was Carnival Cruise. And I think, and by the way, their stock has been on a rip, which I don't like. It's at $21. Earlier this month, it was at freaking 1 month ago. On October 28th, it was at $12. And now it's at 21. Do I still think it's worth 40 plus? I do. Do I think it's gonna? It all depends on when we come out of the pandemic, when they're able to ship, go cruise, and do all that stuff. I just don't know when it's going to be. But I feel like there's a lot of room for error here. There's a lot of room for more debt.
Paul, repeat this question. The people are saying that Carnival Cruise is going to pile up too much debt that they can't get out of. So you have to repeat this for them to hear you.
Well, that's very true, but so are the other cruise lines. And that's where the bet is of if you don't think cruise lines are going away, if you think they're all going to be able to survive in some fashion, the big risk here is they all declare bankruptcy and get themselves out of bankruptcy. That is the big risk. But I'm willing to take that with the upside potential. I was buying, I think my basis, somebody asked me what my basis is. If you guys want me to look it up, I think it's like $13.70 a share. But let me double check.
Paul, when I ask you questions, you have to repeat them because they can't hear me.
Oh, I apologize. So Seth asked me to explain what about all the debt being piled up? Will that be a problem? Of course it's a problem. It's a problem for all of the cruise lines. It's a problem for all the it's a problem for everybody right now. The question is, if you believe somebody, I mean, their cash, guys, Carnival Cruise Line has $8.2 billion in cash. At the end of 2019, they had $500 million in cash. A lot of that is debt they took on. And I look at that. Oh, I'm sorry, by the way. Their liabilities are even less. I read the wrong thing. Carnival Cruise Line's liability is $30 billion. It's only 1.5 times their total revenue. So I'm looking at going, guys, this is a no-brainer. Least debt ratio, tons of cash on hand. Their cash burn is about $600 million a month or $700 million a month. So they have easily 11 or 12 months of cash burn. Is that enough? No. But again, you're looking at this going, Carnival Cruise Line's the biggest one, and they now have the least, I misread something. I was flipping through screens. They have the highest margin, least debt ratio, and they have the most cash on hand. If they're all going to go under, yes. What's up, Seth?
Oh, I love you. Listen, from what I'm gathering, people can hear me, which is wonderful, guys. I'm glad we're all here. Let me jump in to give Paul a break to get some oxygen. Joshua, I see you there. Lang, Tom, some of our Patreons are there. Llewellyn from the UK, I see you guys. Benjamin, I see you. We're back on top here with this. Paul, this is great. We have some amazing questions coming through, and I'd like you to maybe answer them. So again,
this is why Seth is a better host than me.
I bought CCL when we talked about this because I was like you. I really loved your saying that if I believe cruise ships are going away, but other people are bringing up in the chats, Paul, that Jonathan is asking, Jonathan Myers, I see you, brother. Why is CCL taking on debt rather than using their free cash? Are their favorite?
They have no free cash, guys. They have no free cash. They have zero free cash. You mean free cash flow or the cash on hand? There's a big difference.
Will you explain the difference? Because I'm still trying to figure out how this company will survive, and other people are asking, what about another shutdown?
These are all.
How much money do they have to survive?
They have $8 billion in cash, right? $8.2 billion in cash currently sitting on their books as of August 2020. If they've done any more boat sales and any more raising of debt, and I think they're going to issue $1.2 billion in more shares, add that to the cash pile. They have enough to withstand 12 to 15 months, I think, easily with just the cash on hand. If they got these other debt level, they like the other ships sold and the debt and this equity offering, the shares offering, they have plenty of cash on hand. Free cash flow is a recurring thing. Cash on hand is a one-time snapshot. Their cash on hand is plenty. They have zero free cash flow right now. They have negative free cash flow. That's the $700 million burn a month that they're experiencing, $2 billion a quarter that they have to sit there and pay out. That's where the cash on hand. So as an example, let's say you have $10,000 in your bank account. You lose your job and your bills are $4,000 a month. You can last 2.5 months. That's all the way to look at it. Right now, they have $8 billion in cash. They're generating very little cash in. So they're bleeding $600 or $700 million a month. So so they can last 12, 13, 14 months without the extra things they're doing. This is not updated over the last 2 or 3 months. I guarantee Carnival has done more things to raise more cash. And their total debt, right? I was looking at the total assets, not the total debt. Their total debt's only $31 billion, and their stabilized revenue is $21 billion. They have less than 1.5 times debt on less than 1.5 times revenue as their debt. That's you there?
Yeah. People are saying that very loud F-bomb right off the bat of the show got people's attention.
Welcome.
CCL went up 20 just on the vaccine news. Do you think it'll push? Oh, this is great, Jonathan. Great question, Abla. Yeah, this is great. Do you think it'll be pushed higher?
Yes.
When they restart fully?
Absolutely, and that's the point. It's once they get restarted, that's what we're waiting for here. We're waiting for them to say, guys, cruises are happening again. Once that happens, I guarantee the stocks are going to skyrocket. Now, the question is, will it go from 20 to 10 again in that time period? We don't know. That's what investing is, guys. Investing is all about saying, what are these risks? Do I have enough upside to account for these risks? With CCL, I think there's enough upside. Could I be wrong? Absolutely. What if they go through a 4-year shutdown? They were screwed. But that's the point of being diversified in your bets. I am making a bet that CCL will go live before they get inundated too much. Let's say they go live tomorrow and they can start taking cruises again. They have $8 billion in cash there. They can pay off $8 billion of the $31 billion they have in debt. Okay. Now they're not going to do that. They still have to operate, but we're banking on them going live again very soon. The whole point is how long can they survive without having any revenue in? They can survive with just cash on hand right now, 12 to 14 months. Okay. So you have to make a bet. You think that at some point in that 12, 14 months, if they aren't able to raise any more equity or any more debt, that cruise lines will be back up and running. I don't know. That's the bet we're trying to make.
Paul, we got some great questions out there, guys. You're doing great. Make sure you're smashing the like. And again, we apologize for the stream going on and off. We're using a new software, and Paul was easily able to jump on, start cursing, and be himself within seconds. So we appreciate you guys jumping over. It's incredible. Paul, I guess the main question is why we wanted to talk about Royal Caribbean and Norwegian is do you feel like this upswing can be copied with these two companies? I mean, we talk about hype. We talk about the hype of Tesla. We talk about NIO and their quote unquote growth stocks. Can these other cruise companies follow suit and maybe go through an astonishing rise?
Of course. But remember,
you didn't predict this months ago, right?
Of course, all these cruises. If we went live, if all of a sudden the shutdown stopped tomorrow, every cruise would benefit. My goal is to buy the best one in this situation because I do believe CCL is by far the best one. Does that mean CCL won't go bankrupt? Absolutely not. But I believe they're the last ones to go bankrupt. And that's what you're trying to make it. Guys, it's just like sports. There's a guy that makes 45% three-pointers. One guy makes 40%. That's a difference of one shot every 20. Not a big deal, right? But when it comes to 30 shots in a game, that's a difference of 1.5 points, 1.5 shots made, which at 3 points is 4.5 points per game. The average NBA game is decided by less than 6 points. That's the point here. In investing, especially in value investing, we're trying to make a bet on 20 or 30 companies that fit a certain mold. And we're going to be wrong on several of them. We're going to be really, really right on several of them. And we're probably going to be good right on a chunk of them. That's the goal of investing. I'm not trying to buy 3 or 4 companies and say, I'm going to be really right on all these. I'm trying to buy 20 or 30 companies that fit this mold where I'm going to be wrong sometimes. I'm going to be really, really right sometimes. But a lot in the middle will do pretty well. That's the goal of investing.
Yeah, Paul, I don't know what date we are. I can look, if you guys look back at our CCL analysis, I bought right after that, Paul. I bought when it was around $14 a share and 12 over 20. I've made 42% on that. My kids bought as well. But, like I said, regardless, Paul, we talk about how the hype of stocks sometimes it bolsters their price. I go back. Do you think the hype will follow with Norwegian and Royal Caribbean?
I think of course it will. But that's not the point. Isn't that the point? Is
I'm sorry, Paul. I know your discipline approach is not going to let you buy that. But are you expecting for our traders out there that we'd see similar upticks?
I absolutely. I mean, if a rising tide raises all ships. That's to be no pun intended. It will definitely help everybody.
Wow, this is interesting. I don't know if it's true. I have to research. But Vinny says that the Saudis invested 8%, purchased 43 million shares of CCL. They believe it's not going away. That's pretty interesting. Did you hear about that?
I did not hear about that one. As you can,
Ramon saying it's older news, but yeah.
How old is it? How old is that news?
I've been following this ride the entire year.
My cost basis is $14.80 on CCL.
Say it again.
$14.80 on CCL, and I was hoping it would go lower so I could add to it. Like I wanted to hit 10. I have a lot of puts on CCL I have puts at $5, $10, another $5 one with different dates, $7.50. Yeah, I have a lot of puts on that thing, so I'm making a killing on those puts. But what do I care?
So can you explain the put on CCL, what you did one more time? I know it's a little tougher without...
Yeah, so I put a bet on for January 2021 and January 2022 that the stock would not hit $5, $7.50, and $10 a share. So I brought in money. As long as the stocks finish above that, I keep the money. If the stocks finish below those marks, I get the shares. So either I get the shares at a price a lot lower than I think it's worth, or I get to keep, and I also get to keep that money anyhow. The put revenue I brought in, or the options expire, I keep the money anyhow, and I don't get any more shares.
So now that it's skyrocketed, folks, if you're following along, we did a live stream yesterday where we talked all about day trading, options, puts, and
Well, you want to hear what I have on it right now?
Go ahead.
I have a call on it now for December 11th at $23 a share. So what this means, guys, is I have almost my entire position that as long as it finishes under $23 a share by December 11th, I get to keep that money that I got on the call. If it finishes above that, I pretty much lose all my shares and I don't get anything above the $23. So my $23 number means if it goes to 25, I only get the profit up to $23. After that, somebody else gets the profit. But I'm okay with that because I wrote that the stock was at like $13 or $14 a share. So that's the risk you take.
Paul, it sounds like we have some incredible questions I'd love to ask you. CCL, Jonathan, I love you. I don't know. I don't think Jonathan is a Patreon yet, but damn it, you should be. CCL used various tools to build cash. This includes borrowing at a high interest rate, even at 11%, if I'm not mistaken. How long do you think it'll take to recover such debt and start paying their dividend back?
Great question. They got to get completely stabilized. I think we're years away from that. I do think we're years away from that. They got to get completely stabilized. And by the way, guys, for everybody asking me specific questions, this is why you need to join the Patreon. Patreon is awesome. There are 3 levels for it. If you want full access to Mo and I, it's the highest level. Is it a lot? Absolutely. But Mo and I have made a commitment we just decided on today. We're going to talk about all our investing ideas in the Paul Super Shorts chat. We're going to talk about every single idea we have. We're not going to say exact dollar amounts, but you're going to be able to watch and read and ask us questions. The second level, there's a lot more to it than that. You're going to get some live streams, things like that. But we're literally talking about every single thing that we're trying to look at. We talk about fully, like it's just him and I in the group, and you can ask any question you want. So if you believe that it's worth $100 a month to be able to learn from our thinking and see our thought process, which I think it definitely is, it's only limited to 25 spots. There's already 3 of them been taken. There's only 22 spots left. But we sit there and talk about everything in that Super Shorts chat that we discuss. You will see literally every single comment. Yesterday, we analyzed stamps.com. After this live stream, we analyzed it separately in the chat and discussed it. And one of our guys in there pulled up the 10K himself and started reading it himself because he wanted to learn how to do it.
What Paul's talking about, guys, is, of course, our Patreon page is patreon.com/everythingmoney. Paul and I created this along with our producer, Don, to get more exclusive access to this wonderful gentleman, the sexy gentleman you see here in the white. You get part of our Discord channel. There's 3 levels. In the upper level, you basically get to text Paul on a daily basis. And Paul, I really love this morning. What you're actually just telling us what you're buying and how you're buying it. I even got fired up, and I get that information on a daily basis. So it's incredible, guys. Make sure everyone out there, I see you guys watching. I love you. A lot of new names, Paul. Welcome everyone who's here. Make sure you guys are smashing that thumbs up button. Just please go give it a little tickle for Paul. He loves it. Do you think there'll be another dip soon? Sold all my buy calls yesterday for good profit. Definitely want to do it more of a drop. Now, Paul, Travis asks this, and frankly, I own 400 shares of CCL. I know maybe that you talked about some options for myself, so that's a good question. You know,
what's the question?
Do you think there'll be another dip soon?
I have no idea. I have a big bet against the market. I have a lot of shorts on the literally shorts, not just my shorts. I do have jips. I do have shorts on the market, and I do think the market's going to fall. I just don't know when, and I don't care to know when. I'm just here to ride it out and make every decision every single day based on good companies. I wouldn't be surprised if CCL goes to 10 again. I have no idea. I don't care. My goal is to buy shares. It's funny. Nordstrom, I was building a position in. Now it's skyrocketed. It's at $30 a share. I started buying it at freaking 12 and 11. And most people would be excited about it. I was not. I wanted it to stay low so I could buy more shares. CCL, same thing. Love, same thing. I want lower price shares. So I'm hoping for a drop. I think there will be a drop. I have no idea when it'll happen. Anybody who says otherwise is just lying to you.
Jonathan asked Paul, I'd love to see Paul break down 10K. He will absolutely do that if you join the Patreon. For sure, you'll get more access to us. And I don't want to plug the Patreon too much, guys, but Paul and I will go in the Patreon. We do Patreon-only live sessions just like this where we take your calls. It's uncensored. It's evening fireside chat with drinks. And the cursing that you saw Paul doing will definitely be occurring more often.
Well, I've actually been cursing a lot less lately. I've had it, but for some reason that one bothered me. I think the technical difficulties bother me.
Why is that, Paul? You've been cursing.
Because I see how much money we invested in this thing, and to still have these like things happen. It's like, me and the technical stuff.
No. I mean, why did you stop cursing? Is the real question.
I've started to realize that happiness and all that stuff. I've been a lot happier lately from internal thinking and changing my thoughts about things. And but it's not perfect. And this is my first outburst in last time I remember. I don't remember the last time I even had a bad day, Seth. Can you believe that? I can't even recall the last time I had a bad day.
Well, that's nice to hear. I mean, let's get back to it. I love you. Since time is money, so to speak, at what time period, if any, did you give up on the stock whose intrinsic value just can't get realized by the market? Alex, great question.
That's a really great question. Some people would say a year. Some people would say 2 years. I just think as it doesn't happen, you got to keep reevaluating and keep talking to other people about what am I missing here? Is there something I'm missing here? And maybe the story, maybe you didn't see something. You know what I mean? So I don't know. It's a hard thing to do because you just never know. That's the art of investing. You never, ever know. Now, when it comes to exiting, yeah, you get kind of an idea of when you want to exit of something. Like if it hits your value, as long as you my whole thing is pick a system that works for you. Don't just do it off the cuff. Decide, hey, listen, when it gets to 90% of my value, I'm going to sell half the position. When it gets to 100%, I'm going to sell the rest of it. I don't know. But as it goes on, you have to keep reevaluating. Am I still right? Has any information changed that makes me feel like when the $1.2 billion stock offering happened for CCL, that made me go, okay, let me go run these numbers and see, okay, how much does it dilute people? Okay. All right, not so bad. It dilutes about 5%. Okay, I can deal with that. It takes my 50 to 60 down to 47.5 to 50 to 57 or something like that. I just look at it going, okay, I'm fine with that. Now, if all of a sudden they went and issued 20 billion in shares, I'm out. You know what I mean? Because that cuts everything in half. So that's how we look at things.
We got some great questions, guys. Welcome to some of our new viewers. Paul, the intro F-bomb was epic. People really love that. What broker do you use to overwrite? Kryler asks.
Merrill Lynch. And I'm not promoting Merrill Lynch. I just have a good relationship with the office at Merrill Lynch. They don't charge me asset management fees because I manage my own money. And the guy's great that I love.
Inca Warrior asks, do you use DCF analysis to analyze?
Discounted cash flow analysis. I know what I do is I basically run the model in the company based on revenue increasing over X number of years, profit margin staying the same. I have these different models of doing that, saying, okay, what do I think revenue is going to do in the next 5 years? What do I think profit's going to do in the next 5 years? And I do an analysis, number of shares, et cetera. And then I just sit there backwards and go, okay, for me to get this X% return, I need to pay this for the company. Okay, move on.
As we described for our patrons, I love you. If you're watching December 10th in the evening, Paul and I will be going live from his home with another fireside chat. So if you're interested in that, you can join us. Benjamin Rourke asks, is there anything that will automatically disqualify a stock no matter how good everything else looks? Benjamin, this is a great question. We talk about our 8 pillars of analysis. And Paul, we had one a couple days ago that didn't hit that many green check marks, but you still liked it. So that's a great question. Is there anything that will automatically disqualify a stock? I mean, coming from my vantage point as a lonely, normal person, it seems like you could really judge what's going on right off the PE. It's completely absurd, right?
No. I mean, you hear me every single time we talk about PE. I say PE in and of itself doesn't say much. You can find the there's no, how should I put this? Nothing will ever make me buy a stock just for that one reason or sell a stock for one reason. I want to look at the whole idea. Now, if I think that management is unethical or if I think that there's some fraud going on, I'm out. That's a see you later. And that's what this book is having me do. Learn financial shenanigans, how to detect accounting gimmicks and fraud in financial reports. And I'm not done with it yet. I've been reading it for a while. I'm about 80% through. But that's something that I look at because at the end of the day, I want to know, are they acting in the best interest of shareholders? Now, the unfortunate part is in most very large publicly traded companies, they want to make sure that their options are exercised and they do well, et cetera, et cetera. So that's part of the issue. So it's a whole look at the whole thing together, deciding what do I want from here.
Paul, it's funny. One of our great patrons, David Spicer, before you said that sentence, he said, recent fraud always immediately turns me off. He's very proud. It is interesting that our patrons are getting very like-minded with your thoughts. That's probably why they join us. But yeah, you're right, Paul. Tell me this. I have a question. You bring this up quite often. And, it's my job to sort of bring the news to you and we talk about it. But you stay in touch with the news. Look at that, Paul. Look at that guy.
I think Tom Jacques asked, what the hell is that thing behind you? Looks like a six-way sex device.
Well, that's interesting. That's interesting you say that, folks, because if you watch the patrons, if you watch the last fireside chat, Paul has an intriguing lamp at his house that I think looks like a bunch of butt plugs attached to a lamp, but he loves it. So yeah,
love it.
We're sticking with the sex toy novelty around your office. But Paul, listen to me. I totally forgot what the hell I'm saying. How often does fraud happen with these companies? You mention it a lot, but I don't know if I hear it that often.
No, it doesn't. But if you go Google, the last 20 years, major accounting frauds, Enron, WorldCom, Tyco, I mean, they're all over the place. And the other thing is, it's not just fraud. It's understanding how do they look at their books, and do they do the books in a way that misleads people to believe that things are better than they actually are. It might be completely, it's kind of like taxes. There are things you go are definite, you cannot do this. And there's other things that are kind of like, listen, I can make an argument for this. So the question is, are they trying to do things that they can make an argument for that are not good for investors? That's why I look at free cash flow. Free cash flow can be manipulated, but it's harder to do. It's harder to manipulate where the cash is going, because cash is cash. But you can make, there are many companies who can show a profit without having any cash flow and vice versa. So you got to watch for those things.
Paul, Dave asked, do you invest in bonds at all? He was looking at a bond EFT like TLT from iShares.
I do not.
Plus your treasury bond. Why is that?
The only thing, because I can get I'd rather just have for a 20-year bond, there's too much interest rate risk. And I want the money ready for investing in stock. I want to be 100% stocks, guys, 100%. So I might do 90-day treasury bills. And I do that in order to, because they don't get affected by interest rates, but they pay very little. That's why I do the options. That's why I do the put strategy, so I can generate income to get above, a 3 or 4% return on my cash. But I don't do 20-year bonds. And now I will go at some point in the future. I'd like to go look at corporate bonds because I think there's a lot of interesting plays there.
Paul, do you envision our followers getting into puts and calls here in the near future? Or
I don't know about the puts. I think the calls are a decent strategy because there's less risk. You might lose some upside potential, but it might be a way to generate some extra income with very little risk, in the sense of the risk you have is the stock goes above the strike price, so you miss out on some gains, like might happen with me on CCL if it goes any higher. Or not CCL, Nordstrom. And CCL. CCL is at 23.
Tom, one of our patrons, we can absolutely put some of the book titles that Paul loves. Paul, this is a question that comes up while we're waiting for some more questions. What are some other books that you're in love with you've been reading nowadays?
Well, this one we haven't started yet, but Mo and I are going to be reading this to learn about banks. That one's a pretty boring book. I read
it looks boring already.
Complete Turtle Trader. This is what I'm going to be doing for my stock trading account, Complete Turtle Trader. At home, I'm reading a lot of like cheesy life books, things like that. This is a great book. Common Stocks and Uncommon Profits. It's by Philip Fisher. This is required for me by Gary. It's a great book. It's a good way to look at stocks as a way of growth, not just value. It's a blend of value and growth. That's a good one.
Carpe Diem asked, Paul, do you have to have 100K in your trade account to buy any calls? I think the answer is no from what we learned yesterday.
Well, to buy calls, I'm talking about selling calls. I talk about selling puts and selling calls, not buying them. I want to sell calls against the shares I currently have. You have to have at least 100 shares to sell a contract, though. So you need at least 100 shares of stock. This is called The New Money Masters. I really like reading books about people's investment philosophy. And the reason being is once you start doing it, you realize everybody's investment philosophy is different and it's based on different things. My philosophy will be different than everybody out there. What you have to do is pick what works for you. Don't do what somebody else does just because they do it. Do what works for you. If something makes sense to you, do it. It's just like real estate. If Warren Buffett came to me and I was trying to buy a piece of real estate and he said, this is a bad deal, I'd be like, congratulations, move on. I wouldn't care. I'd look at it and say, listen, I did my analysis. I got to trust my analysis.
Paul, someone else said, does Social Dancers from Canada. Paul, we have tons of Canadian fans. I do love these people. I love Canada. Does the stock have to hit the stock price at the call deadline, or can it hit before the deadline?
It can hit before then, but that's not called away. It's on, and Mo can verify this for me, Trader Mo. I believe with the way the U.S. ones work, it has to be on the date of at the time of expiration. I don't think they can be called away. Maybe I'm wrong on that one, but I've never had one called away beforehand.
Now, I've obviously known you a while, Paul. It seems like just this year, you and our day trader analysis, our Trader Mo, you guys have really gotten into the stocks of this, puts and calls.
Yes.
What advantages are you seeing as to why you're doing these puts and calls?
It generates income and adds to the return. and allows me to buy stocks at predetermined dates at predetermined prices. It allows me to sell stocks at predetermined dates at predetermined prices. So it's a way for me to just sit there, collect income. And I wish I'd been doing it for the last 5 years.
I guess the point is, why are you so successful at it? I mean, I'm trying to. People are wondering, like, why are you so successful at this?
Because the market. When you're selling puts, the higher the market goes, the more likely you are to make up your money on the put. So the market's gone the right way. If the market were to fall, my puts wouldn't do as well. My calls would do better. So it's just a matter of. It's been market timing. You're not going to hear that from many people. Most people would say, "Oh, I'm a genius." No, it's market timing. Now, my strategies will work over long periods of time, no matter which way the market goes. But in any given length of time, it's gone well or not well. Remember, I haven't been in the market for the last 4 years. How well has that gone for me? I look pretty stupid, right? Yeah, but my philosophy is based on value, and that hasn't worked lately. So I move on. Like, I don't have FOMO. I don't have fear of missing out.
Stockmo is chiming in on the chats. One of our top tier patrons, Zachary, is here. He asks, "What does the sell to open, sell to close, but open and buy to close mean?" Oh boy,
Zach, you're in our super elite Paul Super Shorts. Let's talk about that in this Paul Super Shorts because it'll take too long for me to explain. I'd rather talk about it separately. Boy, Vinny knows his watches. Like, literally, I'm sitting there waving my hand around. He goes, "Hey, is that an Omega Speedmaster?" I'm like, Jesus Christ, he knows his stuff.
Vinny, I don't know. Is Vinny in the Patreon, Paul?
No.
He's incredible. He's
Vinny, he might be in the Patreon, but he's probably in the Vinny, are you in the Patreon? I have no idea. But either way, I mean, Vinny should be in. Yeah, Vinny is a beast. Vinny should be in the beast mode. So we're
Paul, are you shorting the market right now?
Yes, I'm very short the market right now. And I've lost a lot of money on that short. I've lost a lot of money on the short. I started shorting at my basis on the short is like 3,100 in the S&P, I think. So I'm maybe 3,080 or something like that. But if I believe it's like an investment long term, I'm dollar cost averaging as the market goes up, waiting for a fall. I made a killing on my short in March. And I got really lucky.
How much of a killing are we talking?
Multiple seven figures. Majority of that was recouped losses, though. And then
you had been losing for about 4 years betting against the market.
Correct. But then I got out and started shorting again as it went higher. And so my difference is multiple seven figures. I have quote unquote saved myself, made multiple seven figures since March on that short.
Dom, one of our Patreons, asks, "How confident are you in that market short at this point?" What would
it is tough.
You're doing it, so you're confident. But I mean,
Dom, it's very tough to go against the market. Everybody thinks I'm stupid. Everybody thinks I'm crazy. Market only goes up. I feel good about it. Remember, it's also not a big chunk of my portfolio. It's about, like, the loss right now is about 1.8% of my family's net worth. So it's not a huge loss right now. And I'm hoping that it makes a big gain. I'm very comfortable with it. My brother and I joke about it all the time. Mo jokes about it all the time. Trader Mo does, in the sense of, like, he wants me to add more. I want to add more. My brother's like, don't do it. Because my brother's afraid of his shadow when it comes to this stuff. But I'm confident in it. I just know that all it takes is a few things to happen. I mean, look at it. February 19th, the market was at 33.93. March 20th or 21st, it was at 21.90. Come on. Like, these things can happen very quickly. Yeah, correct. David Spicer. Market is overvalued. The question is how overvalued. I think it's double overvalued, at least double. So we'll see.
Tom said he's been selling puts the whole year as well. Once volatility calms down, won't put sellers to have to take more risk and the same amount of money.
No, so when stocks fall, put prices go up. When stocks go up, call prices go higher because people perceive it as, oh, it's more likely to hit, therefore we're going to charge you more money. So it's just a healthy balance of it.
Benjamin asks, how is that different from dollar cost?
It is not different. That's exactly right. Yeah, my short strategy of shorting along the way up is dollar cost averaging on a short. Exactly the same thing. You're right, Benjamin.
Let me ask this question again, Paul. Just let me finish it.
Oh, I'm sorry.
So Benjamin's asking, how is it different from dollar cost averaging overvalued stocks now? And if they go down, buy more. For example, Amazon, as a Microsoft, have all stayed flat the 3 months. So
I'm sorry. I just think they're so overvalued, though. You can just wait. If you want a dollar cost average, pick into something that's reasonably close to its value. I think Microsoft is worth under $100 a share. It's at 200 and what's it at right now? 213. I think it's worth under 100. I think it's worth 80 or something like that. So to me, that's not dollar cost. It is dollar cost averaging, but why dollar cost average is something that's so overpriced? Go find another company that you should do.
What are your top 3 stocks to completely stay away from right now, Paul?
Tesla, and Tesla. NEO, Tesla, and I still think Amazon's overpriced, but I'm an idiot.
And what are your 3 top stocks that you love right now?
Well, I'll tell you what I own right now. The companies I own right now are Biogen, Carnival Cruise, Farmers National Bank, Fox. I have the ETF miners, GDX and GDXJ. They're ETFs for gold miners. I have InMode still. I have Intel, Nordstrom, Southwest, Herman Miller, Steelcase, and Walgreens. By the way, thanks to the 2 people who signed up for the Patreon during this live session. Seth, are you there? I think we lost Seth again, guys. So, oh, maybe not. Maybe we didn't lose Seth. Did we lose Seth? I don't hear him on my end. So anyways, Seth died. Poor Seth. Can you recommend a good resource to learn to read charts? Oh, so chart reading, social dancers. Chart reading is a totally different. I don't like chart reading. Trader Mo should answer that question. I don't like chart reading because to me it's too subjective. Here's what you do. If I'm going to be subjective, I want to do value investing. Chart reading is everybody's like, well, I see this. I don't do it. But Trader Mo can definitely answer that. Yeah, he's definitely lost. So yeah, we don't invest. Oh, there he is.
Prajesh, I love you. Captain Seth, Paul, instead of Uncle Seth. Captain Seth, I'm back. I did die. Yeah, I'm sorry, guys. Paul, I think the end of this is my internet, which I pay way too much money for, is not.
Are your kids live streaming right now or something? Are they watching?
No, it's funny. It's funny is your other company, Paul, Dynasty owner down the hall from you. They're live streaming right now as well.
I know. So really quick, there's another company, Ben Rourke. Is there a company you love and are waiting on the stock to look good? There's a ton of companies I love like that. Microsoft, Google, Apple, all those companies have phenomenal balance sheets. I just need the price to go a lot lower on them. Absolutely. I love the company's futures. I just need the stocks to go a lot lower. They are literally the perfect company except for valuation. And that is the difference between a stock and a business. The stock represents what people's perception of the business's value is. I don't think the business is worth as much as the perception is right now. That's it. Seth, are you still there?
Yeah, sorry. I'm just looking at what people are saying. Yeah, they're firing.
Yeah, Ben, balance sheets and all those companies look phenomenal. Phenomenal.
Says he has Comcast and no, I'm sorry, Paul. People are just busting my chops for my internet.
It makes you want to punch a baby.
I pay $110 for 1 gig of internet speed and blowing up at the moment, unfortunately. So, okay, Paul. This is great. Paul, moving into the weekend.
We're going to go longer today, by the way, since we had technical difficulties. We're going to go longer. Is that okay, Seth?
Oh yeah, that's fine. I'd love to keep that as long as the questions keep coming. I don't have to keep grasping at straws for content.
Of course.
But what do you see? One of the questions that someone asked on another live stream is, what do you see in terms of retail? Obviously, heading into the Christmas season, people can't go out, and it's just a really strange time. So
remember, I react. I don't try to guess what the results will be. So I'm not trying to guess what's the company going to report, what's the season going to be, all these things. I just react to it. I react to valuations and I react to the market news. That's basically my job. And I want to, it's funny. I was reading a book the other day about all these traders who hear about events and they want to react to the events before they happen. I'm like, that's too much work to me. Like, it's too much guesswork. I'd rather just sit there and say, all right, this event happened. Did people misunderstand what happened? Did they over exaggerate what happened? And that's why I like value investing. Seth? And Seth's gone again. So yeah, what other questions we got? The National Retail Association says 5+% more retail expected. Wow. From last year? Jesus, Pete. That's incredible. I mean, I don't understand that. That's a good point, Paul. What about knowing certain technologies? Phoenix, you're right. Certain technologies can do better than others. I just don't know which ones they were, and I don't try to guess what they'd be. I mean, I'm not in the know enough. I'd rather sit there and just react and say, okay, this happened. Great. Now what? Okay, let me make this reaction to this. People exaggerated this, either on the high or the low. That makes more sense to me. I can wait that out as opposed to guessing what's going to happen, in my opinion. Let's see. What's my thoughts on Salesforce potential acquisition of Slack? Don't care. I mean, Salesforce is already overpriced. I'm sure Slack is overpriced. More power to them. I'm going to avoid it. What do you think about Shaw Communications? Never looked at it. What's the longest you stayed invested in a stock? Years and years and years. I've had stocks where I've had them for years and years and years. What am I doing for Thanksgiving? I'm going to my brother's house. He and my father will cook. We'll have Thanksgiving with the family. We'll have a good time. We'll break the law because we're not supposed to be 6 people together. Who cares? How do you feel about investing in companies with known unethical practices? So depends what you mean by that, social dancers, because everybody's idea of ethics is different. For example, a lot of people would consider landlords unethical for evicting people. Well, I'm a landlord. I evict people. I evict mothers, fathers, children because they don't pay the bill. To me, that's not unethical. But there's a lot of people out there who think it's unethical. A lot of people think it's unethical to have a lot of money. Okay, so the question is, are they doing illegal things? I have a problem with that. Unethical things, that's all in the eye of the beholder. I have no idea what's unethical to you. You don't have any idea what's unethical to me. It's just too hard. Turkeys are not overvalued. They're actually massively undervalued. They are the most beautiful, tasting, healthy meat I could ever imagine, and I love it so much. Definite buy on turkeys. Interesting. So is it safe to say you never try and buy right before earnings calls? That is correct, Jonathan. I never do that. I'm not here to guess what's going to happen there. I'm not here to guess that. I did buy that 140 put on STMP Phoenix. But we are thinking about exiting it. But I did buy that put just to see what goes on with it. When's Seth going to join back up again? He's much better than this. What's your price target for Nordstrom? I don't remember what I did for it last, but I think it's getting up there. I think it was $40. I don't remember exactly what it is, Daniel, but I think it was $40 and it's getting up there. I mean, it's already at 30. Is it 30 right now? 28, 37. I think I might sell my Nordstrom. I think I'm going to sell it right now. I'm going to sell it right now, actually. It's gone up a ton. I'm up 50% of Nordstrom in that long a period of time, in that quick a period of time. I'm not going to add to the position, so do I want it anymore? I've made a good buck. I'll sell it after this is done. We'll see. All right. You're doing fine, Paul. Thank you very much, Benjamin. Amazon seems to be lagging behind the market. Any interest there? Zero interest in Amazon at these prices. Amazon's way too overpriced for me. Are you interested in new markets like renewables? Nope, not interested yet. The problem with new markets is, Dave, new markets tend to be sexy. Everybody runs to them. Everybody says it's the future. All the money's here. To which I say, well, 100 years ago, cars were the future. How many car companies have gone bust since then? 80 years ago, airlines were the future. How many airlines have gone bust since then? It doesn't matter what the potential is. You still have to find companies that are able to operate in them. That's what matters. And when people sit there and say, oh, there's going to be a bunch of demand, who cares? I don't care. To me, all it says is there's going to be a lot of people paying way too much money to enter the business. I'm out. Tom Burden, that's a good question for our Patreon, but I do not follow the 1% rule. I do profit versus expenses. Let's see. What do you think of? I don't look at Charlie Faraday. What do you think of AEP? I don't look at commodities like electric companies, gas companies. I just don't understand how they work. How do I short the AEP? Okay, great question. Is Jordan? I think it's Jordan, right? How do you short the S&P? SPY. I short the ETF. I would not short if I were you guys. Do not short. Do not short. I repeat, do not short. I'm in no energy sectors whatsoever. And the reason being is I just don't understand. I don't like the fact that the profits are inconsistent based on the changing value of the commodity. So I just, to question above, Kate Johnston, I have Walgreens. I have looked at CVS lately. There was a reason why I passed on. I don't remember what it was, but I took Walgreens instead. Keep slaying Paul. Thank you, Seth. Thank you for coming back on. Let's see here. Let's see what else you guys have. How do you short? Yeah, the S&P short. That answered the question. Let's see here. Have you ever looked into Applied Materials, AMAT? Let's look at Applied Materials right now. Okay. Let's see. Their PEs is an X. It's a 20.8. Not bad. Profit margin's good, 24%. For those of you who don't know, Applied Materials is the world's largest supplier of semiconductor manufacturing equipment. Probably has a lot of potential there. Financials. Let's look at their annual earnings, revenue. 10.8, 14.7, 16.7, 14.6, 17.2. Check mark. I imagine there were some acquisitions along the way and probably a disposition as to why their revenue fell. Profit, 1.7, 3.5, 3, 2.7, 3.6. Definite check mark there. Number of shares outstanding, 1.1 billion versus 900 million. Definite check mark there. Cash on hand, total current assets, 13.4 billion. Total current liabilities, 4.4. And total liabilities, 11.8. So these guys have $2 billion and more in cash than all their liabilities. So they could take all their cash on hand, pay off all their debts, and still have $2 billion left over. The company is currently valued at $74 billion. So you take the $2 billion off, it's currently valued at $72 billion. Now, for the big thing, free cash flow. Let's see this. Let's go to annual free cash flow. Again, everybody, what's free cash flow? The good news is they only spend about 15% of their cash from operations on capital expenditures. So their free cash flow average is minus 422, minus 441, minus 622, minus 345, minus 253 divided by 5. I have them worth around 55 or $60 billion. They're currently at 70. So they're a little overpriced, not by much, not by a whole lot. Their free cash flow is increasing, which is great. But Applied Materials, go back to the question. This is a company to keep on your radar. Great financials, great balance sheet. Keep it on their radar for future looks. You know what's interesting though? Yeah. So I would keep a look at this one. On this one, Charlie Faraday asks a great question. What are your thoughts on small cap stocks? You will make more money on small cap stocks if you find the right small cap stocks to buy, because large cap stocks are followed by everybody. Small caps are not. There's more value plays in small caps than in large caps. That is a fact. It's going great. You just keep looking at that. Let's see here. What is your take on Dropbox? Pass. Do you think gold or gold mining companies good? Okay, so gold, Dave. That's why I bought the ETF GDX and GDXJ. I didn't know how to manage gold. I didn't know how to value it. So I sat there and said, let me buy the mining companies that will do well if I think gold is going to go up, which I do think gold will go up over time, especially if we have inflation, especially with financial issues in the economy. So I bought GDX and GDXJ to make a play on gold. That's what I did. Let's do 10 more minutes. What do you guys think? Let's see. Have you looked at Barrick Gold? I have not looked at a specific. Barrick is very big. What do you think about Tractor Supply? I like Tractor Supply. I think Phoenix. I think I like their. I think I looked at them recently. I think I like their PE is a little. It's 20.8. Profit margin's a little low, 7.3. $15 billion company. I think I like them though. Let's see here. Growth in revenue from 6.2 to 8.3 billion. Growth in profit from 410 to 560 million. Shares outstanding from 135 to 120, so definitely getting better there. Cash on hand, total current assets 3.2 billion, total liabilities 2.1, so check mark there. And cash flow, they have a high. Their operating cash has gotten a lot better. It's almost doubled in the last 5 years. It's gone from 450 to 810 million, and their capital expenditures have about stayed the same. So they're increasing their free cash flow, and the multiple times 20, it's actually a little overpriced, I think. The company's a little overpriced. It's $133 a share. I'd probably look at it under $100 a share, is my opinion. At $100 a share below, I'd probably be looking at it. And it did that in the last 1 year ago. They were at $67 a share. In March, they were at $67 a share. Even before March, they were at $100 a share. So it's something to look out for. Hey, Matt, does your wife really love Tractor Supply? We don't have one in Hawaii. Oh, you're in Hawaii, Phoenix? That's impressive. That's 6 hours behind. You get up for this? That's awesome. So great question, Jordan. My goal is not to look year over year. My goal is over a long period of time. I'd like to beat the market by 2 to 3%, not including my puts and calls. So I'd like to beat the market by 2 to 3% based on my value plays. And hopefully my puts and calls that I write generate me another 2 to 4% a year. So Trader Mo said he sold his profits on JWN and kept your initial investment. I'm just going to sell my JWN right now. Guys, I don't like doing this only because it's a little, but the JWN is over doubled in the last 1 month. Like I look at it saying, I made a good profit. Let me just get out of here. Let me just move on and just do it. So that's what I think. You want to. What's TMO? TMO, Thermo Fisher Scientific. I think we looked at this one before. PE of 36, profit margin of 22. How do they even pay a dividend? It's 0.2%. That's terrible. $176 billion company. Revenue 17 billion 5 years ago, 25 billion now. Pretty solid. Profit 2 billion to 3.7. Solid. Number of shares outstanding up by 1 million shares. 399 to 400 million. Not bad. Balance sheet. Cash on hand, total current assets, 18.2 billion. Total current liabilities, only 6 billion. Awesome. They have 3 times more current assets than they do current liabilities. That is sweet. Free cash flow. Free cash flow growth definitely has happened. So I would say 3 billion, 3.4 billion. So 3 times 20, 60, way overpriced. Way overpriced. Yeah. Thermo Scientific, unless you believe there's going to be some massive reason why. Guys, everything about investing is assumptions. And it's about risk. And you have to sit there and decide the more you pay for something, the more risk there is it doesn't work out. People don't realize that. Risk can be mitigated based on price. That's the one thing I always tell people that they don't agree with me on. All these investment gurus say, when they say, what's risk? Risk is price to me. What are the chances? What's the risk of buying a lottery ticket? 100%. I mean, you're probably going to lose. But if you could buy a lottery ticket for 1 cent and the chance of winning $1 billion is 1 in 100, you do that all day. You're probably still going to lose, but if you do it 100 times, you're going to win. You're going to win big. The risk has been greatly decreased. So at the end of the day, risk is based on the price you pay. I think this is too much for this company. I would be, and look, by the way, it was at $530 a share just 1 month ago, and now it's at $444. So when people say things don't happen, that happens. Yeah, let's hit the like button. Everybody, check out our Patreon. There's the $100 level, $25 level, $8 level. The money goes to pay Don and Seth and pay for the app. I lose about $100,000 a year off this channel right now. This is going to help mitigate all that. But the thing is, on the $100 level, you get complete access to me. You get to private message me. You get to do a lot of things that you don't get to do in the live stream, things like that. We've been very active. There are 3 members of the $100 channel right now. Which is pretty solid. They'll verify. They get complete access to Mo and I. We talk very actively. We're going to be talking about all of our investment ideas in this as we look at investment ideas. Awesome. So anyways, maybe we should cut it short, cut it down. It's not short, but we were going a little bit longer. Any other questions, guys? MinMed. Let me look at MinMed real quick. I don't even see MinMed. I don't have a ticker for MinMed. What's the MinMed ticker? I don't know if Beyond Meat is a moat. I don't think Beyond Meat's a moat. I haven't looked at it yet, though. MindMed. I still don't find it. I'm still not finding it. Oh, Neo sucks. Captain Seth's internet is poop, Prajesh. That's why he left. RCI. Let me try RCI. In Canada. Okay. Its PE is under 20, 19.8, check mark there. Profit margin of 14%, check mark there. Good dividend of 3%, 3.25%. Their market cap is $23 billion. That means to buy the entire company, look at $23 billion, 3.25% dividend yield means they're paying about $800 million a year in dividends. So let me see here. Financials. Annual revenue. Not much growth, 10.5 to 11.4, still a check mark. Profit, 1.05 billion to 1.5, check mark there. Number of shares outstanding, minorly down, still a check mark, 515 to 512. Balance sheet, total current assets of 4.8 billion, Total current liabilities of 4.5. So not much margin there. They only have a positive of 300 million. Not the worst, not the best. Free cash flow. Okay. Oh, very high percentage of the cash from operations is taken out to capital expenditures. Very big number. Their average free cash flow is about $1 billion a year. So, guys, I'd want to buy this company since they're not growing a ton. I want to pay a low multiple for it. I'd want to pay 12 to 15 times free cash flow. So you're looking at 13 to 15 billion dollars for this company. It's at 24. So I got to think that's the thing with a slow growth company. You're not going to make your money off of growing. You're going to make your money off of the cash being distributed back to you. It's a good dividend. But they take out a lot of their free cash flow into dividends. They're paying about 800 million of their $1.1 billion in free cash flow every year. So that's the way it works. So I would sit there and say, my opinion is I'm a buyer sub 15 billion, which is a stock price around $30 a share. That's my opinion. And they were there in March. So Seth is telling me to keep going. Now, granted, remember one thing, social dancers, I don't know if that's the right price. I'm just telling you the way I view it, but you should do your own analysis of it. This stock can keep going up forever and actually be worth it in the future. Can you touch on why you're thinking about exiting your STMP put? So we did a deeper dive, and there was too much. It was like they relied so much on the U.S. government. They relied so much on other things, and it was like I'm still fine with the stamps.com put right now. It just wasn't something that we saw. We were like wowed with. We were just like, okay. It was just a lot of uneasiness, and that's the qualitative part of it. We just didn't like the business model overall. They did really well recently, so I'm willing to hold this put for a little bit longer. But if I ever get a nice profit in it, I will probably exit it. There's too many options out there for better investments, in my opinion. And that's the other thing about investing, guys. You got to remember that if you do enough companies and value enough companies and look at enough companies, you can say no to companies that are borderline saying, I'll find something better. Just keep moving on. Find something better. Paul, do you have any professional teacher education training? Just curious. I used to talk about doing that, and we've done it in the past. I just would rather teach the masses right now. I like teaching the masses with a one-on-one. I didn't feel like my time. Bottom line is I want to charge $2,000 an hour for my time. Who wants to pay $2,000 an hour? I'll wait. And that's the problem. I've had people pay me large sums of money, not $2,000 an hour, but over $1,000 an hour before for other things. And I'm just like, you know what? I prefer to teach the masses. It's much better for me. Oh, but I am going to be teaching. A college course soon. I won't say where. It'll be a grad school, but I'm working on that in the Cleveland University, and I'm pretty excited about it. Exactly, Phoenix. I want to get 1,000 people to pay me $10 an hour or $10 a month so I can help people in general. I've never taken professional training as an educator, David. Sorry, I didn't understand your question. I've never taken professional training as an educator. Do I do pretty well with it? I hope so. All right. What else you guys got? Do you recommend reinvesting dividends? What kind of tax? I don't know what the tax implications are. You might want to look with account on that one, but it all depends on what you want to do. I like getting the dividends. I get enough dividends to be able to reinvest in other companies. I just like doing that, but I don't think dividend reinvestment's a bad idea. KBH. I will not do KBH, Luis. The homes are kind of weird. They have great financials, but home builders, I'm just always antsy about home builders. I think you're right, Phoenix. Phoenix is right. We do go too fast. So if anybody needs us to slow down, please let us know. That's another reason to go to the Discord, to the Patreon, so we can do things faster with people who've always watched us before. Or if you're new, to come to the Patreon and ask us more specific questions. We want to be doing that more and more. What else you got? Slow your roll, bro. GRWG. Let's see what that is. Let's see. Grow generation. 641 PE. I'm out. I'm not even going to look at it. It's telling for 11 times revenue. Pass. I'm not even going to look at it, guys. It's going to be way too crazy. Guaranteed. They barely make money. I think we've looked at Palantir. I do not like Palantir. Although it was funded by one of my favorite people in the world, Peter Thiel. I love that guy. Chess player and billionaire. He's awesome. And libertarian. Let's see here. SNE. Sony Corp. Oh, I haven't looked at Sony in a while. Sony is selling for 13 times earnings, 22% profit margin. Check. $114 billion company. Okay. Revenue growth last 5 years, 66.8 to 75. Check mark. Profit 1.2 to 5.4. A check mark. Boy, right before them, though, very inconsistent profit. That's bad. Number of shares outstanding over the last 5 years, put down like by a couple million shares. Number of total current assets, 66 billion. Total current liabilities, 71 billion. So that's an X there. One of the few X's on that one. They have more assets, more cash on hand than what they owe right now. So that's not a good thing. Free cash flow over the last 5 years is up from 3.1 to 8.4 billion. Let's call it an average of 6. Let's see here. For times 20 is pretty reasonable. I'd want to know why they lost money in the first half of this decade and made not lost money, but they had very inconsistent profit in the first half of the decade versus now. But this is definitely a company you want to sit there and understand what is their future. What are they doing? It doesn't seem unreasonably high. It doesn't even seem high at this value right now. It's not 15, but it's looking at going, okay, well, they don't pay a big dividend, but a high return on equity. I'm not opposed to Sony. Just figure out how they're growing. Let's look at their cash flow statement. Are they making acquisitions, which I tend to hate? Son of a bitch. Now my internet's going down. Do you guys still hear me? Anyone? Oh yeah, you guys still hear me. That's weird. Why is this why is Y charts going down? Oh, there we go. You're here. Oh my Lord. Got it, guys. All right. Oh, the other, so it's Y charts is down right now. Y charts is good, spinning, but my other website, they're working. So guys, let me talk about the app real quick. Everything Money app is going great. It's still 9 to 12 months away. Well, Social Dancers, I want to create the Everything Money website that I'll be doing the pillars from. I'm going to have it look a lot like Y charts just so it's easy. I want to make sure that I'm going to try to come up with a free version. The free version will be very, very limited, but I want a free version that's very, very limited. Like maybe lets you see 2 stocks a month, and maybe 3 of the pillars or 4 of the pillars instead of all 8. I want to make sure you guys, I'm not trying to be rude, but you guys are going to get a lot of value out of this. I want people to pay for their value because I believe that we value things more. I also want to give more access to myself, which costs money. So the app is going great. It's going to be ready. Remember, if you join our Patreon, you get the app for free as long as you're a Patreon member. So it's a reason to join Patreon. Worst case, even the smallest level of $8 a month, because the app's going to be every bit of 15 to 25. And I'm going to put a lot of my day trading strategies in there. The things I do in the day trading front will be in the app. It won't necessarily be available for everyone. We're going to see. It's a work in progress. Just be very patient about it. So back to Sony, I wanted to look at their cash flow statement and see how many acquisitions they're doing. Acquisitions, actually not a ton. They're selling a lot of stuff off. Now it might be a net change, but they're not doing a lot of acquisitions. So that's pretty cool. But they're, I don't know, guys. Sony's not terrible. I'm not completely opposed to Sony, but we'll see. It's got a lot of momentum going right now, I think. The technicals right now are insane. It crossed the 200-day, crossed the 300-day in November of 19 at $62 a share. And now it's at $90. So you'd have done pretty well holding on to that. So anyways, what else we got? Anything else, guys? One of the things about the app that's going to be great is I want to make sure you guys are able to put lots of stocks in as a portfolio to be able to do the full 8 pillars on a portfolio of stocks. So let's say you have 20 stocks together. It'll add up all the revenues, all the profits, all the number of shares, all the free cash flows. So you can sit there and say, your portfolio is 7 out of 8 green pillars, check marks on the pillars. It's going to be awesome. I have looked at Unilever before. Let's see here. Foreign company. Where is it based out of? 155 billion, 23 profit margin. I'm flying through this. Revenue is down in the last 5 years. Profits up. Shares down. Balance sheet 20 billion versus 23 negative on the on that one. Free cash flow 7. So 20, 140, I'd probably pay It's currently at $60 a share. I'd probably pay $45 a share for this thing. And by the way, this is all off the cuff. Now, remember, when I say that, I think it's worth $45 a share. Me personally, I'm trying to buy it way lower than that. I'm trying to buy it for my low end of my spectrum because I'm a value investor. I want to buy $1 for 50 cents. So have you looked at renewable? I don't look at renewable energy stocks because it's a hype. It's the hype right now. Friends is the worst show ever. Social Dancers, I'm sorry. I used to love it. And then I got a comedic taste and I hate it now. So sorry. Let's see. Anyhow, anything else, guys? I think we should maybe end it right now. Thanks very much for dealing with the technical issues. Hopefully it's good. Social Dancers, you used to love it too. Great. I'm glad to hear that. All right. So thanks, guys. Have a good Thanksgiving for everybody in the States. Everybody outside the States, enjoy us being shut down completely for a day. I appreciate everything. You guys are doing great. We have very consistent live streams. They do very well, and I appreciate it. Thanks, guys. Now, how do I stop this thing? Oh, end stream.